The private sector credit extension figures did not come as a surprise to some economists. Economist Avi Root noted the slight acceleration in the private sector credit extension and money supply numbers.
In other words, there seemed to be a slight increase compared to previous months for credit in the South African economy, and one would have expected that simply because of the government of national unity. That means that people are more willing to take on more credit, and we all know that there's more of a positive sentiment in the financial market, so one would have expected that, as well as the lower interest rates, and at that time the expectations of further reduction in interest rates. Those are all factors that probably would have contributed to a slight increase in private sector credit demand and hence money supply as well.
According to economists, households are expected to pick up credit in early 2025 as conditions continue to improve. This as debt service costs are expected to reduce with falling interest rates, along with lower inflation and the implementation of the two-part retirement system.
Households will be able to afford more credit in early 2025 and of course starting in late 2024, because we expect falling inflation to boost disposable incomes, interest rates to decline further, which will boost affordability, and of course the withdrawals from the two-part retirement system are likely to be utilized for reducing debt levels, at least some of them, and that will simply mean that consumers with lower debt will be able to take on more credit in 2025.
While the increase has been described as low, economists suggest that the latest data on private sector credit extension and money supply indicate that the South African Reserve Bank has more flexibility to lower interest rates further. This month, the central bank lowered the prime rate by 25 basis points. Nosipho Radebe, SABC News, Johannesburg.